Hello again, everyone, and welcome out to your weekly currency room. This is Ankit here, and as always, we'll be breaking down this week's price action and most importantly, talk about our upcoming week ahead. And as we take a look at the markets, again, we'll be starting with the broader market analysis, taking a look at what's happening in the broader market across the board, bring it down to our currency basket analysis, and then talk about some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we look at this week's price action, there's a lot to digest because we had a lot of movement. It was a volatile week across the board, and we saw volatility in the equities, in the currency market, in the crypto market. So it was a really good week for anyone that's an active trader. Now, this week we had the equities really wanted to look like wants to break lower, and here we are rallying higher. So quite a turnaround in the equities from the first half of the week to the second half of the week. We also had the USD and the bond yields. They did pull back after the FOMC, and so did today after the non-farm payrolls report. So we're seeing a bit of a change happening in those two areas. We have the gold that continues to pull back, but remember, gold has been doing really well for the last few weeks. So we're just getting a little bit of a pullback here. Crypto, again, it remains volatile. We had a volatile week across the board, but the trend remains bearish. So really can't really say anything changed for the cryptos. The trend remains weak. Overall, there was a lot more velocity than the trend move that we saw in the cryptos. Now, let's take a look at the schedule, because this is where it was a busy week. There's a lot to digest, but let's just look at the highlights. Really big movements happened on Wednesday after the FOMC. So it doesn't matter what they say. It's all about how the market reacted to it. So right after that, we saw the equities rallied. And right after that, we saw the bond yields pull back and the USD. So that's really what matters the most here. And that's really where the big movement was. And we got a nice extension to that move with the U.S. employment report today. As you can see, the numbers today were not good. And this is one of the reasons why the market rallied, because the yields pull back. Take a look at the non-farm numbers. Again, they're expecting 240,000 jobs. It came out at 175. Unemployment claims 3.9 versus 3.8. So it's a lot, bearish report. Compared to what we got in ADP on Wednesday, take a look at ADP. They had a 192 versus 179. So this really caught markets off guard. And we saw a big move in the yields. And as the yields pull back and the dollar weakens, guess what? It really releases that pressure on the equities where, rising yields have been started to affect or put pressure on the equities. So that's really where we saw those opposite moves. Regardless, it was a great week, a lot to digest. Most importantly, we'll be taking a look at what kind of movements we can expect in a follow-through move next week. So let's just take a look at last week's review. Now, looking at the numbers here, you can see the equities doesn't do justice here. Again, 0.64. That was, again, a big turnaround week. We had a 2.5% down on the Tuesday and almost a 3.5% rally by Thursday and Friday. So that's a big turnaround. Same thing, World Stock Index doing well. Crypto, despite of the volatility, remains weak. Gold remains weak, and we had a massive move down in the oil market. So overall, here we are in the chart, and this is what I want to highlight. We talk about how this was a nice bear rally pattern, got up right into the 20 and the 50-day moving average, and we got a big roll down on I think that was Tuesday or Wednesday. So here we are, Wednesday, Thursday, Friday, rally higher, but Tuesday was a big ugly day in the markets. So as we end this week, we are above the 20-day moving average and right at the 50-day moving average. So that's a drastic change, going from a -2 right here to now a +1 over here. So market again looks more bullish now as bearish. Again, a lot of changes. This is where you got to keep in mind is that as we get above this 50-day moving average, market now has more positive sentiment here, but we still have a resistance here. So we might just be running here in a little bit, but then we still have a bit of a resistance to clear. Maybe this is just a giant range-bound price action that we are seeing over here. But again, big shift in the market sentiment. Now, let's take a look at the numbers and take a look at the currency market. As you can see, in the currency market, we have massive move in the yen. So among all the volatility that we saw with the FOMC, and we saw big volatility with the non-farms, we had a Bank of Japan intervention. So that was, again, a big move that really came out of nowhere. Again, we've been talking about it. And one of the reasons why I've been talking about it is that's as a potential risk. And as you can see, this week was a great week to be not short the yen, but actually to be on the long side. That's, again, a big move to 2.83%. So you should really look at any currency pair. The best moving pair was the USD Swiss franc and even the Canadian, the USD yen and also the CAD yen. Massive movements there. Outside of that, you can see the euro and the pound at pull back. Again, kind of getting a little choppy price action in some of these European currencies. Swiss franc is not really moving either. So consolidations happening in these three currencies, but definitely a lot more direction in the dollar and the yen. And take a look at CAD really got pulled down with the USD. So I think they both look pretty weak, and the Aussie and the Kiwi, they're showing slight gain there. But again, I think that's really where the strength has been. Last week, Aussie was really strong, and so far it's holding that level. So we really got to take a look at the best versus the worst, and that's really where we're going to get the biggest movement. Here we are in the crypto. You can see there, the Bitcoin was the least worst, but then Bitcoin Cash or even Ethereum actually down, underperforming back to back, week over week. So overall, I'm not that interested in the crypto here. I think I'm getting a lot better movement in the currency market. So let's do our currency analysis and take a look at our market outlook. And as always, we're going to take a look at the matrix. And here we are at a +1. Why we are at a +1? Because we are no longer below the 20-day moving average. We actually above 20-day moving average. We are right on line with the 50-day moving average. So this is, again, giving us a much better reading than what we got last week. Now, take a look at where we are in the yields and take a look at this. I've been really long yields in dollar as long as it's staying above, but you can take a look at this one. Broke below that 20-day moving average. And again, that's a big turnaround from this level where, it tried to go higher and it pulled back. And here we are pulling back further. And very similar price action that we saw in the USD as well. Now, the crypto markets, like I said, despite the rally, this is still pretty weak. The trend below the 20, below the 50, not so interested here. Now, let's take a look at the schedule for next week. So we are lighter on the economic events, but we still have some notable events like the RBA rate statement that's coming out on Tuesday. Again, late Monday, early Tuesday. It's 12:30 a.m. Eastern Standard Time, so just watch out for that time change there. Not expecting any change, but remember it's in the statement that's really causing those big moves. Hawkish or dovish, it's important to be active around these central bank announcements. And we have another one on Thursday, the Bank of England, that again coming out at 7 a.m. Eastern Standard Time as well. So these are the only two that we got to pay attention to. But outside of that, some numbers on Friday, the Canadian Employment Report. But yeah, lighter on the news front. But this is where we get to focus on the continuation patterns, to follow through. I think that's really what we're looking for going into this week. And as the outlook goes, market again likely to extend gains, and the yields and the dollar, they're likely to pull back. So that's what we're expecting going into next week with two central bank announcements, and just only one day on Friday has some economic reports. So let's do a currency analysis and take a look at things one by one.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, If you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Let's start with the crypto markets and take a look at the Bitcoin. So again, the chart's going to look very similar. Trend scores are -2, but then the velocity is up in the shorter term. So this is where we're not getting any trade here. -2 and a +2, it kind of cancels each other out. So similar theme across the board as we take a look at Bitcoin Cash, Ethereum, and Litecoin. So let's not spend too much time here and take a look at currencies. And as we take a look at currencies, I mean, take a look at, the dollar that was sitting at almost a +3 is now sitting at a 0. And you can see that we are right at the 50-day moving average, but a break below this level, we can easily turn bearish. So this is where looking for some bear rallies to short into or some basing patterns. So again, those are the two ones that we would be looking forward to. But definitely it's worth taking a look at dollar more on the short side right now than the upside. Because again, we have the yields that are supporting it. So we're not going against those trends. But again, always important to take a look at these crossroads where the trends are likely to reverse or change. And that's really what we got this week. Now, similar question arises for the Japanese yen as well. Take a look at this big flush down and a big recovery. So the trend score for the yen was also -3 and now it's sitting at 0. So you can see how big of a fluctuation we had, especially if you take a look at dollar-yen currency pair. So at this point, the dollar or the yen likely to consolidate, but whichever way it breaks, higher or lower, is where the continuation is going to be. If the dollar stays weak, I think the yen likely to do better. As you can see that in the shorter term, it hasn't really given up much of that move. It's just making a basing pattern. So this is where I've been looking for this base to break out of this area to really get into it. So I like more yen to the long side for the coming week. Now the Swiss franc, I still want to be a seller, but again, until it really breaks below that support, we got to be on the sideline here. So I think there's better things moving. Swiss franc kind of gone on the back burner, but as soon as it breaks that support, we want to be in. But I don't really care to play it on the long side. I think there's more risk for Swiss franc to continue weaken further. Now, euro, on the other hand, I want to highlight, take a look at the moving averages. They're going sideways, which is just telling me that this is not trending anymore. It's 0. Even though it crisscrossed above the 20 and above the 50, if you just really look at where we are, maybe we just want to, it's better to kind of give a score of a 0 because it's not really going anywhere. Definitely getting nice arrangement moves, but it's just not going anywhere as the trend goes. Same thing goes with the pound. Take a look at, we went -2 here to a +2 here, now to a -2 here. That's a lot of fluctuation in just 2 weeks of time frame. Again, great for traders that are looking to trade actively. But I know for anybody that's a trend trader, this is where you're getting a lot of mixed signals. But, this is where I think as the moving averages are flatlining, perhaps we can solely focus on these velocity scores. They're giving us some good movements here. And talking about some big turnaround, take a look at it. We were at +2 on the Canadian dollar. Now we are at a -2. So big turnarounds. So at this point, again, I think I like CAD more to the downside than the upside. Look at the velocity, beautiful base, broke lower, beautiful base, and broke lower. That's exactly what we want to see, some basing patterns to short off of. So CAD looks weak as well. Now take a look at what's doing well. Well, look at the Aussie. Aussie's doing better. Despite of all the volatility we saw in the markets, we have a nice little breakout here. We pulled back all the way to the 50-day moving average, and it's rising since then. And 4-hour chart is supporting that as well. So going to next week, looking at Aussie long. And lastly, Kiwi. You can see that Kiwi is back at the resistance, and look at the velocities looking well as well. So I think at this point, I'm not looking to play that divergence between Aussie and Kiwi trade. I think Aussie and Kiwi likely to do better across at the same time. So as the trend score goes, you can see Aussie and Kiwi is where we want to play. And on the shorter side, we want to be on the CAD and the dollar. Again, I think dollar is sitting at a 0 right now, but I won't be surprised if it breaks that 50-day moving average. It goes to a -1 and a -2. And same way, the yen, it could go to a +1 to +2. We had a big week on both the dollar and the yen. and maybe we'll see some consolidation, but whichever side it breaks, continuation pattern, I think that's really where we can move the dollar to the left and the yen to the right. Not so much interested in the euro and the pound. Again, they're kind of going back and forth, but I think we want to be looking at Kiwi, Aussie against the USD and against the yen, and perhaps against the CAD as well. As far as the velocity goes, you can see Swiss franc was not the big mover. We have the dollar, the euro, and the pound kind of underperforming at the same time. We noticed the same pattern throughout the week where they all were weaker around the same time. So I think this is where you get to focus on the best one versus the worst instead of looking at all of them at the same time. Now, the yen is still sitting at a good velocity score, so we'll see what happens on Monday and Tuesday. But yeah, this is really where we are at. We want to be pairing the +2 against the -2 and not so much against the Swiss franc, which is sitting at a 0 here. So based on that, let's take a look at some possible setups ahead. And looking at the setups, I'm just going to take right you to the Aussie USD. So here we are, clear resistance level, and then we have tested that level multiple times. So this is what I'm looking for. I'm looking for a breakout above this, and let's bring it down to a lower time frame. So let's go to a 4-hour chart. So we retested that level, and each time in the past, it just reversed sharply. Now at this point, if this level holds, I know we got a little reversal here, but if it holds and start to go higher, this is where I want to get long. Use this prior support here at 65.80, or we can go more aggressive right by 66 area. I think this is a good risk to reward trade based on this price action here. So also the Kiwi dollar, same thing. Let's start with the daily. Well, daily is right at the 52 moving average, but as we touch this level and we just base, this is where we get to get some bull flag patterns and start to break out higher, and the trend is going to shift with that as well. So I really like the Aussie dollar, Kiwi dollar. Let's take a look at Aussie and the Kiwi against the CAD. So go with the Aussie CAD. Look at that beautiful price action, 4-hour and the daily. So daily is right at the resistance too. Right here, you can see this is has been tested this level for a long time. But once it breaks that, there's definitely more area for this to run and use, prior support around 90 area as a support level, as a stop loss. Same thing goes with Kiwi CAD. We have been range bound and nice slow movement here. So good breakers are happening, and this is where the moving averages start to turn. And as we look at our initial setup, I'm looking to do my order entry more on a 4-hour chart. And right now on a 4-hour chart, I'm just getting a bit of a basing pattern here. I don't mind if we get a bit of pullback or maybe go base here. But as we break above that 80 to 40, that's really the area where I like to be going long. So those are the trades that I'm looking forward to next week. Let's take a look at the dollar yen as well. And you can see how big of a movement that we had in the dollar yen going from 160 down to 152, or let's just say 153. 52 in the bottom end, that's about an 800 pip move in the dollar yen. That's a huge move. And we talk about how powerful these moves can be with intervention, but then we also have the movements in the dollar and the yields that are also helping that trade. So again, we are right at the moving average there at 52 moving average. We are in between the 20 to 50. This is where don't mind seeing a little bear rally to short into. But if you go in a shorter term time frame, even a 4-hour chart, you can see we had, a big drop, a big bear rally, and a big drop over here. So I wouldn't mind getting a little bear rally to get short into. Those are the setups we want to be taking a look at when we take a look at some continuation patterns. So those are the ones that I'm really watching. And as a trader, you always want to be flexible. We want to be flexible. This week is a great example where you could go into this week with a whole different outlook and come out with a whole different outlook. So adapting to change in the market is important. As we look at the conclusion, looking for high bases, looking for pullbacks, for continuation patterns. As far as the bullishness goes, Aussie Kiwi, got the euro, the pound, the yen in the middle there as a neutral, and the dollar, Swiss franc, and the CAD as a bearish. But remember, dollar and yen are right in the middle there at a 0, and that can really move one way or the other. So look for those bear rallies or some pullbacks to really enter those trades, along with the Canadian dollar that's also looking pretty weak. So Thanks for joining. Great job this week. I know some traders caught some really good trades, especially on the yen and also on the dollar. So keep up the good work, and we'll see you next week. And until then, take care and have a good weekend.